Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news the economic clouds are darkening for New Zealand. First up today, the overnight dairy auction was terrible. Prices fell 7.4% in US dollar terms and 4.8% in New Zealand dollar terms, principally on an almost 11% dive in the dominant whole milk powder price. Remember, these falls are from the prior auction 2 weeks ago, which was also quite weak, so the declines are compounding, and these retreats are far worse than expected and getting worse quickly. The whole milk powder price is back to levels we last had in August 2016, and dairy farmers will be sweating because since then we've had 20% overall inflation. Why the collapse? NZX dairy analysts remind us that China has produced 25% more whole milk powder domestically over the past 12 months, while their domestic consumption of the commodity has fallen almost 9%. That does not suggest there'll be any bounce back anytime soon. Elsewhere, things are not so grim. US retail sales top forecast to be up 3.2% in July from a year ago, and the best result in 5 months. And it came even though car sales dipped slightly. In Canada, their annual inflation rate rose to 3.3% in July from 2.8% the previous month, and this was above market expectations of 3%, so very similar to the US CPI inflation rate there now. In Japan, strong export growth propelled their economy in the second quarter to be up 6% at an annualised rate, far higher than the expected 3.1% or the first quarter expansion of 3.7%. It was their third consecutive quarter of strong growth. Meanwhile, China's in economic defence mode. Their central bank cut its one-year medium-term lending facility rate by 15 basis points to 2.5% yesterday. It's their biggest cut since 2020. It came as Chinese bank loans plunged almost 90% in June to the lowest since late 2009. Their prime loan rate cuts are expected next week. And it came as they released industrial production data that was weaker than expected, and retail sales were weaker than expected too. In Australia, their central bank says soft wage figures have strengthened the prospect of a cash rate pause, and they warn their labour market may be about to turn down. The US Treasury 10-year yield will start today at 4.22% and up 3 basis points from yesterday and matching its October 2022 highs. And the price of gold will start today at $1,903 an ounce, that's down $7. And oil prices are $1.50 lower at just on $80.50 a barrel in the US, while the international Brent price is $84.50 a barrel. And the Kiwi dollar starts today soft at just on 59.6 US cents, the nearest lowest since November 2022. Against the Aussie, we're holding at 92.2 Australian cents. Against the euro, we're marginally softer at 54.7 euro cents. That all means our trade weight index is now at 68.6. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.